Hello, I'm John Lappin, editor of Mindful Money. The investment industry is undergoing radical change with new rules and new entrants who plan to shake up the way you access investment services. We're talking to one of those new entrants today, Nick Hungerford of Nutmeg. Now, you've been very outspoken about how the investment market, the investment industry needs shaken up. So what's wrong with it?
Well, I think we have seen for the last 300 years an investment industry that is based purely on two business models. The first one is execution only, where you trade for yourself, you pick your stocks, you're involved in the decision making. And the second model is one where you delegate. So you give your money to a professional, they sometimes consult you, but at other times they'll take your money, they'll put it in one big pot, they'll ask you questions like, are you low, medium or high risk? And then you'll hear from that investment professional once or twice a year. What we are trying to say is that people these days want control over their money. They want to understand exactly what purpose their money is working towards. So these two models, which are so disparate and so far away, do not represent what the vast majority of people want from their investments, which is a position in the middle, whereby they can control, they can set goals for their investments, and yet have some professional underlying managing the assets, working hard for them on a day-to-day, minute-by-minute basis.
So what does Nutmeg do that's so different?
Well, all our research, and we spent about a year building the Nutmeg proposition based on deep ethnographic research, so spending 4 or 5 hours at a time with potential customers to find out not what they necessarily thought about money or investments, but what was important to them. And all of our research showed us that people like to plan for events in the future that are real to them. So for example, you may have some children, John, and you may be thinking, okay, when my first child goes to university, I've got to find a pocket of money for that. When my second child gets married, I've got to find a pocket of money for that. When my third child wants to buy a house, I've got to find a pocket of money for that. And what about me? I'd quite like to buy a second home. I'd quite like to retire comfortably. And people can really associate with these goals. So Nutmeg allows you to create a portfolio for each one of those individual goals. But underlying that, the Nutmeg investment team, which is full of over 100 years worth of investment experience, is managing those portfolios for you. So you know that your son's university pot is being managed in a specific way for that specific goal.
Can you explain in a little more detail how Nutmeg works?
Sure. So we have designed the system around customer needs and customer wants. So there are a couple of intricacies which make Nutmeg so special. The first one is making sure that the customer has the lightest possible cognitive load. So it has to be straightforward, it has to be simple, but it also has to be very smart. And when I mean cognitive load, I mean taking off the decisions like, should today I trade Japan equities or should I trade South Korean equities? So Nutmeg manages the underlying asset allocation, the geographical diversification and the sector diversification within your portfolio. So in that regard, we are similar, indeed we are a discretionary manager, so we are similar to private wealth managers and stockbrokers in the fact that we manage your portfolio on a day-to-day basis. But we also allow you 24/7 transparency to look at how your money is doing. We allow you to dig deeper, to see the transactions that we've made and the holdings that you've got. We allow you to compare your performance across different time horizons. So it's very interactive for the customer. So you're always able to get a picture of how we're doing on your behalf. So that you aren't tempted to say, okay, I'm going to switch all the other way to execution only because I think I can do better. And I think another key difference is that our charges are just so much lower than the average in the industry. So with Nutmeg, inclusive of VAT and inclusive of all transaction costs, with no entry penalties and no exit fees if you wish to leave, you pay between 0.3% and 1%, whereas the industry average is 1.37%. So we know that by taking out the cost of that salesperson, by reducing the fees for the investor, hopefully we'll have generated better long-term performance because we can put that extra money back into the investment team and stop charging the customers so much.
Now, looking at the two different models the two main models that there are in the market at the moment,
Yep.
Taking execution only, there are some very good services out there They've provided an awful lot of research and information, and there are people who started investing many years ago, have now got big pots and are reasonably well off, and they have tools on those websites where you can check on your portfolios, see where you are, maybe even see where you want to go. So why is your service needed in comparison with that?
Well, first of all, I would absolutely agree. There are some fantastic companies out there, both on the execution-only side and on the discretionary side, the private wealth side, which we're closer to. But most people have, unfortunately, the human element of behavioral economics, call it what you will, the temptation to buy high, sell low. They're not checking on their portfolios as regularly as they would like. They understand they don't have the time to be an analyst. We employ full-time investment professionals to look at different sectors in the market, funds, so on and so forth. So there is a proportion of people, and there's absolutely no doubting about it, who enjoy picking their own stocks, who enjoy picking their own funds, and quite frankly, they will never move away from the execution-only model. The people we're appealing to are twofold in the execution-only bracket. The first are the people who would like to have a private wealth manager or a stockbroker, or an investment manager, call it what you will, but simply can't afford it because they don't have the $500,000 that's required to work with these people. But at Nutmeg, we change that world by accepting people with as little as £1,000. So you can have all the benefits of this world for as little as £1,000. The second group of people are those who are transacting through an execution-only basis because they don't want to be here, because they don't trust this side of the industry, because they think the fees are too high. But they understand they're making common investor mistakes. And those are the kind of people who can come to Nutmeg, and because of the transparency, because of our work ethic, because of the way that they can see what's going on, they can feel comfortable shifting back this way.
Okay, and if we looked at another part of the industry, so advisors, regulated independent financial advisors, they've increased their qualifications, they've had a big shake-up in how they charge, and also if you look at some of their clients, they've got a lot of money. They have an emphasis perhaps on preserving capital as well as adding to their portfolios as well. And they may see circumstances change. So you might imagine someone might think they're going to retire and they might have changed their mind. They might say, well, now I want to be a part-time person. I want to do some consulting. I want to maybe change the way I need to plan. Can you answer the sort of questions they have? Like, why are you better than someone going out and seeking advice and getting an advised portfolio? Why is Nutmeg better than them?
Well, I think we have to break the question down into two parts there. One is, are we better than an advised portfolio? Are our investment skills, superior to someone else's? And the first part of the question you asked, when is advice appropriate, and when should you go to an IFA rather than coming direct to Nutmeg, or indeed going to an execution-only broker? And I think the first part of the question, quite frankly, sometimes you will need to go to an IFA. In fact, we often say to people, we don't give advice, and what you're asking for here is potentially something that might involve a trust, it might involve setting up a pension, and in that case, you do have to go to an IFA, and there are some fantastic IFAs out there. But the marketplace has changed in terms of the pricing structures, the transparency that's required following the retail distribution review, and more people are becoming aware that going to see a financial advisor is for a very important time in their life. It's for when they have a moment, getting married, having a child, setting up a trust, whatever it is that triggers that. And it could be a one-off occasion. At Nutmeg, they have continuity throughout their life because we charge on a consistent basis. It's not, by the hour. It's a small proportion of a small percentage of the funds under management on an annual basis. So absolutely, sometimes you might need to step out and see a financial advisor, and that's something we can't help on. But for the vast majority of people, the continuity that an investment service offers will carry through with them all of the time. The second part of the question, can we be superior on the investment side? Time will tell. We are about to be the first discretionary manager in the country to publish our performance front and centre on the website. Not many people like doing that because they say, John, it's very bespoke for you. Well, we're going to break that myth. Now, some people will consider our performance good, some people will consider our performance bad. But the point is, transparency is absolutely key here. And we have a huge advantage. Because our prices are lower, the others already have to do better just to keep up.
And final question, can you convince more people that they would be better off by investing? Can you increase the number of people who invest, put their money to work and see the benefits of that?
Sure. I mean, hopefully that's not just us. I think the whole industry needs to come together, to make people aware of that. And the most troubling issue that I think has really been on our minds at Nutmeg recently is the fact that people in their 30s and 40s who are the most in need of investing, because the older generation potentially have benefited from rising asset prices for a very long time, so they've had the benefit, and it could be harder over the next couple of decades. These people are now becoming more risk averse, and we need to encourage them and say, look, there won't be pensions around when you're going to retire. Won't be state pensions, except perhaps for the most needy. So you've got to put some money away and get it working for you. And that, is something the wider community's got to get involved in, but it's also something that parents and grandparents have got to get involved in and say, look, I started this portfolio when I was very young, and look where it's got me. It's saved my bacon. And so we need everybody to rally round and start speaking about that message.
Thank you very much, Nick, for talking to Mindful Money today.
Thanks, John.